Why pay more for your precious metals from the big guys with offices on Wall Street and who bank with JP Morgan? From the basics like eagles, maples, rounds, and bars, to collector coins like the Silver Shield and Heroes SD War Collection, to our exclusive line of insurance-approved, TL-rated precious metal safes, SD Bullion has what you're looking for at the lowest prices, period. Guaranteed. Find out why over 15,000 new customers have recently made the switch to buying their gold and silver from the dock. Give our team an opportunity to earn your business today at SD Bullion. Why pay more?
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Joining us today is a special guest. It's been a few months since we've had him on the show, Harvey Organ. Harvey, it's great to have you back.
Oh, it's wonderful to be with you guys today.
Well, it's a perfect timing to have you back here. Once again, really over the past week and a half, gold and silver have been hit hard again. And not surprisingly, just as they were attempting to clear some key moving averages. We're recording this late in the day on Thursday, and gold is clinging to support just above 1,100 and looking like by the time we publish this show on Friday, it wouldn't surprise me if it's below that. Silver is clinging right to that $15 level. This week we've had record leverage in gold on the COMEX. So why don't we start by talking about that and your thoughts, Harvey?
Sure. The leverage now, I think, is pretty close to a record at 293. And what it really means is that the amount of registered gold, and gold at the COMEX for registered really means gold for sale. I use it as meaning a dealer, which really it is, but it could also mean anybody who has gold for sale. That's the registered category, whereas the eligible category means gold that is not for sale. So we have seen now, for the last 8 months, I've seen a degradation in the registered to the lowest ever, I think I've ever recorded, 4.7 tons. I can't forever see that was lower than that, which is unbelievable. And JP Morgan has less than a third of a ton, which is also very unusual. Everybody expected that gold would be moving from the registered back to the eligible, and vice versa, to raise the level of the registered, and it didn't happen. So for the last 2 months, you're seeing either 5.04 tons or down to 470, and that is why your leverage is now at the highest ever at 293 ounces of paper gold for every 1 ounce of physical. And that's what it really means. To me, it stands for a bit of a crisis coming in for the COMEX. And this is why they're probably whacking. See, December is traditionally the biggest delivery month, because this is the month when jewelers and everybody else wants whenever they're coming in for their physical gold, they do it in December. They do it once a year. December is always a big delivery month, and for silver too. It's the only COMEX month where both active months are December is in both silver and gold. So this is probably causing a little bit of concern to the CFTC and to the boys. Why? Is because there's only 4.7 of registered gold standing, and it did not move from that level. Everyone expected to go back to 7, 8, didn't do it, staying where it is. And their big bullion bank, JP Morgan, has less than a third of a ton on their registered side. So it's very interesting as to what is going to happen in December. How on earth they're going to settle upon them is beyond me. Now, the other thing I've been recording, strange, this has never happened before. We started in October where the entire month no gold came in. Okay, zero. Actually, there was one transaction. It was a 1,000 kilobars came in to Scotia, and 3 weeks later, that exact amount left Scotia. So why it came in, it went onto the customer side, on the eligible side, and went out. And that was the only transaction. Nothing the whole month. Why is that unusual? It's October, although it's a lousy delivery month, it's still an active month. And never before have you seen zero activity. So I wrote to the CFTC. I said, "What's going on in here? It doesn't bother you? It's rarely do you see that." So now we got November, which is a non-active month for both silver and gold, and we wait upon what's going to happen in December. And it's going to be fascinating to see because, and by the way, today again, no gold entered. And you're seeing no notices filed and zeros coming in. So I'm just telling you, it's an unusual thing, very unusual, especially when we're coming up to December. So that's what I want all you guys to start watching for. Okay, guys?
So, it's been anticipated for a long time that one day the COMEX will default, and you've been calling that for many years. What makes December any different than previous years or previous times the COMEX has been low?
11 months of the year, COMEX, you're seeing paper deliveries, and what you're seeing just doesn't make sense. If you go back 40 years on the COMEX, deliveries were generally settled in the first 2 days. After day 3, nothing occurred after that because all were settled. They took their gold, walked away, and that was it. That was, that's their day. Now it takes the entire month, and I'm seeing the degradation in them outstanding, which generally tells me that we're certainly having some paper settlements. These guys are not cash. These guys are not delivering metal. They're handing in and getting a fiat bonus from the boys for settling in cash because they want to conserve all the gold that they can. It's just that things are different now than what it used to be. And the COMEX as you know, is certainly not a physical market. It's nothing but a paper, yet it dictates the price. The real physical market's over in London. And what are we seeing in London? Gold's in backwardation. Also silver. Okay, that tells me there's scarcity. So how can we have scarcity over in London, which is a physical market, and over here in New York, we're having them flood with paper? And that's exactly what they're doing. So you're seeing a huge amounts of paper, non-backed. They don't have anything backing them, and the CFTC guys just look around and scratch their head and couldn't care less. So basically, it's one basic fraud. The other thing today, which is very interesting, is the U.S. banks. The U.S. who did they hit? They got 2 of Rabobank guys. They were convicted of LIBOR, and I got news for you. When you rig LIBOR, the other component to that is rigging gold. You will not rig LIBOR unless you rig gold as well, because the two are basically hand in hand. And these guys know it, and they're on the same desk and everything else. So it's interesting what's going to happen now. If prosecutors are now going to come in and start going after the manipulators for gold and silver, which is what I've been waiting for years.
Yeah, well, I don't know if we all want to hold our breath in terms of their success. I mean, we've been down this road a couple of times, particularly with the CFTC, and what we can tell, at least with respect to what they focus on in the business press about gold investigation and whatnot, it's always been focused on, the fix is corrupt, and it's similar to LIBOR in that respect. Well, I mean, you know better than anyone else that the realities of gold manipulation are such that those aren't the big guns that keep the price down, and it's a limited hangout prosecution of that particular aspect of gold manipulation in the public media, and then thereafter find some 30-year-old who's trading in his mom's basement or whatever. That's the formula that these regulators go through.
I'm going to wait for China. When China now comes on there, and China still is benefiting from this low price. They're very happy. They probably said, "Listen, guys, sure. I won't unload all my paper treasuries, and meanwhile, you let me get all the gold I can." And that's probably what the deal is. And pretty close to same as silver. They loaned silver, and now they probably want their silver back. And so that's probably the second part of their equation. But now they want to be in on the SDRs. Okay, now what does the United States do? The United States is basically the IMF, and if they delay China, China will be furious. China will then say, "Wait a minute, you knocked me out on. I'll do a revaluation of gold myself, and I'll take all gold since it has most of the gold on its shores anyway, and it'll just raise the value of gold, and that'll be the end of the manipulation." So I'm waiting for China, okay, because China should be the guy to initiate this the revaluation of gold. Okay. Well,
yeah, it'll definitely be interesting to see what their long-term plan is, because one of the bottom line dynamics that will evolve is whether or not the markets move in the direction of a gold standard, a quasi-gold standard, most likely. Yet they do some kind of revaluation to refloat central bank balance sheets, and that kind of is most likely the end game, given how rancid sovereign governments are now when it comes to this debt load in the West. There's very little ways by which the regulators and policy managers and so forth can fix this mess without a reset. It's just a question of when, I think, because there's not enough time to do the kind of financial repression, restoration of the system that they did post-World War II and other periods where financial repression has been used to deal with debt excess.
Yeah, but they have to start all over again, basically. And that's going to happen. I mean, it's just too much. I mean, the world has got about 220 trillion of total debt. I mean, that's unbelievable. And total GDP is about 60 trillion. I mean, and that's not including derivatives. Start adding all those pieces up, and this whole thing is just like one big bubble is going to burst. And then they'll just say, look, we'll take a figure, and then we'll start all over again. Okay. The trouble with the United States is the reason they don't want to do that is because their gold is gone. That's the reason that they're doing all these games now. Is wait a minute, the United States doesn't have the gold. They probably is. And here's the other thing. I think the gold that is being supplied to China is coming from the Federal Reserve Bank of New York. And then you're going to ask, well, wait a minute, why is the Federal Reserve Bank of New York? And he says, well, you're seeing the huge exports of the United States of gold greater than what they have. Well, they're taking other like countries' gold, which is why Germany is desperate to get its gold back. Okay, and of course Austria yesterday had the central bank said one of the reasons that they want their gold back is they're afraid that it's not there. He said that, So
well, a lot of us speculate about where all the gold is coming from to be able to meet this physical demand, and also be part of the part of the process of suppressing prices. And GLD and the other ETFs have been tapped, and GLD is halved in its inventory, and total system-wide inventory is down in COMEX, and the swaps and the leasing operations and all the other things that central banks do and so forth. But when you think about the probable level of imports that China has been taking in, it's a lot bigger than what they're reporting. I mean, they're certainly well above 1,658 metric tons officially. I mean, they got stuff squirreled away in their sovereign wealth funds and other places that they're formally, legally able to not report. And then above and beyond that, they're hiding other stuff too, and then their population is stuffed to the gills with gold as well. So, I'm just kind of curious and stepping back and reflecting on the question as to where is all the gold coming from. And as a colleague of mine and I were talking last night and thinking along the lines of, there's just got to be a lot more unreported gold and hoards that have been making it to the markets, secret stashes and so forth, that could satiate what likely has been at least 5,000 metric tons consumed in China in the last 4 years or whatever, imported 4 or 5 years, that is not hitting the radar screen, and that's a conservative estimate. So I'm kind of curious, what do you think about the state of the World Gold Council and other bodies that try to estimate the total supply of gold that's ever been mined by human history? What do you think? What say you, Harvey?
I think that it's about 160,000 tons. I think that figure has been pretty accurate. Overall.
Yeah, I think actually their official is 170,000.
That's close enough. You can fit it into a tennis court cube. You have to look at Germany. One of the key things. I mean, all of a sudden Germany starts demanding its gold, and also Holland. And Holland gets its gold 122 tons. how did it get? In fact, all 122 tons, I think, come in basically 2 shots to them. How did they get it so fast? Well, then you got that the Malaysian airline that went down, and of course a lot of Dutch were on there, and of course the Dutch have got the black box, and of course you haven't got the data yet. Could that be the deal that Holland made so that they get their gold first? And Germany is getting a total of 10 tons every month from the Federal Reserve Bank of New York. It's their gold. It's earmarked. It doesn't belong to anybody else. Why is it only 10 tons a month? There's something wrong. Next question. Why is the exports of the United States probably $4 billion? They only do 15 or 20 tons a month. Where is this $4 billion coming from? So you got to look at the data and you say something is wrong. So in answer to your question, I would strongly look as the source of the gold as other nations' gold sitting at the Federal Reserve Bank of New York. And they've been stealing it and giving it, and of course they can't say anything. And that's what, and in order to keep paper alive throughout the world, and that's been the deal. And when that gold runs out, that's the end. And China knows this, and just sits back laughing, and so does Russia. And Russia is very anxious. It takes its 30 tons a month, and Kazakhstan and everyone, and the Eastern nations are picking it up, and the poor Western countries are going to end up with zero. Because the gold that they thought is being stored properly is not. Okay, that's my supposition. I pretty think I'm right.
How much gold do you think the New York Fed has left, Harvey?
Oh, probably maybe 1,000 tons, if that. They're showing 5,900 tons. I doubt it, because it's only 10 tons or 20 tons. Last month was 20 tons to Germany. So Germany must have asked more gold to come out. They demanded more. I think maybe 1,000 tons, maybe less. And China's been. By the way, when you're seeing when Coos Johnson's writing and he says 57 tons a week is going into China, it is. That's the demand. It also includes, of course, the mines. That's not sovereign gold. That's not going into sovereign China's. That's citizens. Citizens are buying it. Okay. Gold that's coming, I'm pretty sure that China already accumulated 10 to 20,000 tons way back from 1984 to 1992. And they're now letting the citizens get its wealth. And that's where I'm pretty sure that the gold that you're seeing coming from London and making the kilobars, that is meant for the citizens. That was China's game plan. Okay, they did not do it, and Alistair MacLeod came up with that, and I'm pretty sure he's very accurate on that. He believes it's up to maybe even 30,000 tons that China has, but knowing that, they would have run out by now. But if it's between 20 and 25,000, that's probably the figures it's out, and therefore that would kind of suggest, of course, as the last source of supply on the planet would be gold held at the Bank of England, which is a foreign depository, and the Federal Reserve Bank of New York. The difference between the two is the Bank of England is leased. These guys, it's like putting your money in a bank. If you put your money in, they can lease it and they can do whatever they want with it. Whereas in New York, it's earmarked and it's cannot be touched, and that's where the crime is, and that's where they're trying to hide it, because they can't touch that gold. So if they can't touch it, why can't Germany get all its gold back? So that seems to be where the source of the crisis is. And let's see what happens in December when many players ask for their gold physical, because the jewelers need it and everybody else. And let's see what happens at the COMEX on December 1st. And I'll be following it very closely.
Yeah, it's too bad those 747s don't fly from New York to London anymore, is it?
Yes.
Well, we talked a lot about China, and it's interesting to see what's going on in India, and we should bring that up in the show, because today was the official launch of the Indian scheme to figure out ways in which to slow those, crazy Indians from trying to buy gold and protect themselves from a near 40,000% appreciation or depreciation in the purchasing power of the rupee over the last 40 years. They have launched a plan where citizens will be able to buy gold coins and deposit up to, or a minimum of 30 grams and get interest payments from banks. When they first launched this thing, the banks in response were like, you want us to pay how much? It's just, we constantly hear this, oh, gold is a barbarous relic. It doesn't pay any interest. It won't, you can't buy food with it when you go to a Taco Bell and try to exchange it like Mark Dice did, or with his Cougaran trying to buy a 99-cent taco. I mean, the desperation of the system is very clear. India purchases what is probably the number one gold demand up until recently, when China took its place in 2013. And this program is in an attempt to try to not have their current accounts deficit balloon when India imports tons and tons of gold, literally. And it's going to be interesting to see how people respond to this. I mean, I've, over the course of the last year, followed pretty closely the statements of religious leaders who control probably up to 20,000 metric tons of gold in depositories that have been amassed over centuries from people making offerings to gods at their temples. And some of these folks are talking positively about, oh, well, there'll be a way for us to manage our assets. They're thinking like they're responding to the siren song of bankers. So that's where I think we should probably, as members of the gold and silver community, keep our eyes on, because I don't think the average citizens in India are going to respond very favorably to this program. But it's definitely going to be interesting to see what the leaders of the temples do, because they can be co-opted more easily, because you're dealing with somebody who's running an organization and is a single point of contact for bankers to approach, as opposed to peasant farmers that are diversified and distributed across the countryside. But anyway, it's an interesting announcement today. I think it is contributing to the pressure in the precious metals space overall. Primarily, we're down this week just because of Janet Yellen coming and doing her testimony yesterday, and Federal Reserve minutes, and the whole nonsensical thesis and jawboning that they're successfully being able to put into the marketplace consciousness this week about interest rate normalization starting in December, and it's just not going to happen. Can you imagine the Federal Reserve trying to tighten up markets right before the holiday selling season? It's just it's silly what's going on. Our markets have turned into a nonstop propaganda dog and pony show.
Well, I can tell you that this scheme that India has been, brought up, has been going on for 7-8 years already. I mean, I saw this in the year 2000. They do it every year, and the citizens don't pay attention. And I doubt very much if the shrines will give up their gold. So I just think it's a nonsense. But it does tell you that India does not want to sell it. They just want to have gold move into the sovereign side. Because they only got 551 tons. They want more, and that's what the whole game plan is. So that's what they're trying to do. They're trying to move the gold from the citizen side to the sovereign side. Okay, to help them out, and to make their rupee stronger.
Yeah, and in fact, Modi, the president, said yesterday that he does not want gold to be sitting idle, quote unquote. That's the way they described it. And PR Somasandram, probably mispronounced his name, but he's the managing director of the World Gold Council in India, and he had an interesting quote. He said, "We should see this announcement and launch as a strong indication of an intention to put gold at the heart of the financial system and make it work for the Indian economy." I mean, but the whole point of gold being not heart of the financial system is why, in fact, it's getting strong demand in India, because people recognize that they've seen that 40,000% depreciation of purchasing power over the time of 40 years.
By the way, if you see citizens foregoing an interest, it's the same as being in backwardation. What they're afraid is that they don't want to take interest because they're afraid they're not going to get their gold back, which is identical to what's going on in London. In other words, the citizens are smart. That's exactly the same scheme. Just think about it. So it's identical. So in other words, the citizen says, listen, I'm not going to go with this. I can get 4% of my interest for gold. Now, the question is, so in other words, for every ounce, they get 1.04 ounce at the end of the year. But then they said, well, wait a minute. I may not get that gold because it's just paper. I may not get it, so I'm not going to do it. So they forgo that. That's identical to gold being in backwardation.
And even average peasants understand that the level of interest that the government's going to, or the banking system will be able to pay per the edicts of the government, will never match the rate of depreciation of the rupee. I mean, the history is writ large for them to see. It's been a disaster. The rupee's lost, far more than $1.
Nothing good, but that's the reason behind sovereign India. They want their rupee stronger. And they figure that the one great way to make it stronger is move the gold that they can from its citizen over to the sovereign side. So instead of having 551 tons, they'll have, let's say, 2,000 or 2,500 tons. Then they got a nation that's strong. You see, that's their theory. The citizens are too smart for that. They're not going to go for that. They're happy to wear their gold. And you can't change a culture that's thousands and hundreds of thousands. How many years have they been doing? I think that the Hindus are the longest, maybe 5,000 years. You got 5 to 10,000 years of culture where gold is it, okay? And they're not going to change. I don't care what he says. They're just going to sit there and say, thank you very much, and they won't pay attention.
Yeah, and it's also depressing seeing the World Gold Council being so integral in this whole Indian scheme. And the World Gold Council was integral in the launch of ETFs. And, it has to be said that the World Gold Council, as a trade organization that's supposed to support the whole precious metals industry and advocate for gold and on and on, and the majority of the work that they've done over time has been to just, advocate for increased jewelry consumption worldwide. This is a trade organization by which the precious metals community really needs to have an adult conversation about, because we have mining companies, management teams that think that this organization does good things for the industry, and it doesn't. And that just needs to be said, thrown out there as 100%. Prima facie reality based on what the Gold Council has been able to achieve. It's a total failure.
Oh, they know it. It's zero. The reason that mining companies, they know they're not stupid. The mining companies, but they're fearful that they won't get licensed and permits and things, so they have to go along with this garbage. It's when they start.
Well, I don't know, Harvey. I mean, you're making the assumption that the average CEO at a mining company has the time and inclination, never mind the ability and lack of normalcy bias, to understand the degree to which our world has precious metals manipulation, and what the World Gold Council has been involved with that has helped to create that reality. Whether or not it was a conscious decision or not is not something that I'm going to go to in this conversation. But suffice it to say, the facts speak for themselves. ETFs have sucked away demand from mining companies and hurt the mining industry, and the mining industry is the ones that support the World Gold Council. Hello?
And they pay.
Somebody thinking straight? I mean, the World Gold Council's thesis initially with ETFs was that it was going to bring more gold demand, but in reality it's created honeypots by which the financial manipulators of the world have attacked and used the gold to suppress gold's price.
By the way, if you look back at mine, I've been writing since 1999, and when these gold ETFs came on, I thought it was a fraud in 2004.
Right.
And I haven't changed. I know Reg Howe at the beginning told me, he says, Harvey, you're nuts. It's got to be real. And I was the only guy. And then James Turk came to Harvey. I think you're right. And then comes Reg Howe, and then Catherine Fitz, and then they all realize there's something wrong with the deal. And it's the transactions just don't make sense. You just can't move gold back and forth 2 tons, 10 tons, 6 tons in a day. Find it, put insurance, stock it. It's just statistically or logistically impossible. What goes on?
And I'm a free market guy. I'm not making an argument that we shouldn't have gold ETFs. There's nothing wrong per se with gold ETFs. The problem is that we've got financial market regulations that don't operate and rules that are broken and fraud.
Well, because they're allowed to short. Because they shouldn't be allowed. So you have shares outstanding that have no gold behind it. Okay, so the whole thing is a fraud. You know, I wrote to the SEC and I told them point blank, I said, your SLV and your GLD are fraud. Do you think they wrote back to me? No. I wrote them again. I said, there's nothing backing them. You know, I put it out there. He says, if they came back to me and said, well, yeah, it is. Oh, sure. Okay. But
yeah, well, I mean, I have to say this for the record. It's not, being snarky in my comments in response to what you just said. We don't really know the degree to which there is backing. So when we say there's no backing, we can't really say that and be 100% sure. I think it's probably the case that most likely there's, a decent amount of gold, but half of what they claim, somewhere around there. I mean, we just really don't know.
And that gold that was there allowed these bankers to take that gold to feed China, Russia, Kazakhstan. That was feeding them.
So okay. I'm gonna send you guys down a rabbit trail here at the danger of our listeners here. So if that theoretically, if that was the case, and the gold was sourced from the GLD, and now in our conversation, they've been talking about the New York Fed may be running low. As I sit here and listen, really the only main hoard of gold left in the West, obviously not talking about the East and China and Russia, the Vatican comes to mind. So I'll send you guys down a rabbit trail. Do they go over after the Vatican's gold next?
That's a loaded question. Jeez.
Well, there's been a lot of speculation that the Vatican hoard has been tapped already. Yeah, and it's possible. I mean, they
Go ahead.
Go ahead. Go for it.
What I wanted to tell you guys, the last 6 months, the gold that's been coming into the market is coming in from Venezuela. That gold has left. They had 367 tons, and Maduro, being stupid as he is, he got into so much trouble in his paper. He needs cash badly. So he has liquefied his entire, by December 1st, he should be his 367 tons will be gone. That is probably the last 6 months pressure has been that. So I want to tell that to everybody, because that's definitely going on there. And he will have obliterated his gold by the first week of December. And so then what is Venezuela going to do? It's got nothing. It's got its oil, and that's basically it. It needs food, can't get it. Its shelves are empty. It's going to have real problems.
Yeah, Doc, there's really no way to answer your question definitively, but I think that it's probably a fair assumption to make that periodically that source of gold has been tapped. And the reason why I say that is it's just a matter of basic logic, because the power center interests, if you look at it from a power theory, from an organizational power theory point of view, the Vatican and the oligarchs associated with that whole nexus have an interest in seeing the system function just as much as Wall Street bankers in the city of London. The incentives are there for them to be tapped. Whether or not it has been tapped, it's really hard to say. And the degree to which it's been tapped.
Does anybody have any idea how much they have?
That's also an open and ambiguous question. I mean, no one really knows.
I suspect it's enough to keep the game going for a couple more years, at the least.
Well, no. Well, that's if they're giving it up. I mean, there's no indication that they would. They know it's money. They know that's their wealth. To give it up for paper, I doubt it. That's...
Yeah, we're reflecting back on one of the other calls that we've done. I think it was the time before the last when you joined us. We talked a lot about how there's very clear prima facie evidence that there's a formal agreement between the United States and China when it comes to redistribution of gold to bring China up, such that at some point, if there was a reset, because, as we talked about a few minutes ago, the most likely long-term end game is going to involve a reset of one form or another just to deal with this debt, because there's no other way of getting around that. All that said, it's likely the case that there has actually been a formal agreement for China has been permitted to acquire physical. And I think that's part of what's going on.
I think it's logical. I think that it's been, and I've been saying it for quite a while, that I think that that's how silver got into the game. They knew they were manipulating gold because gold was down. So who was the only nation on earth to have a huge hoard of silver? And that was, of course, China. China was a silver nation.
Yeah.
Oh, Mao just locked it up for 50 years. Nobody knew what to do with it. And all of a sudden, the United States said, hey, wait a minute, you got about 600 million ounces of silver. How about lending it to us? And probably China said, hey, why not? I'll loan you the silver and I can buy the gold cheaper, which is what they've been doing for the last 10, 12 years. Now, of course, they want their silver back, and maybe that's why there's been certainly a lot of conflict now between China and the United States. The United States is certainly, sending their ships to the South China Seas. They're trying to show her muscle, and China is basically saying, "Listen, I want my money." It's an interesting game what's being played. Especially the other thing, of course, is Russia with what's going on in Syria is another serious matter. But we'll leave that for another topic. But it's very scary. You would think with what's going on that gold would be skyrocketing. Kind of pressure, and yet these bankers just keep supplying this paper non-backed, and it's very easy. All they do is just keep hitting massive amounts of paper, non-backed, and then the regulators just look the other way. There's no way these guys have any gold behind it. So so the West produces the paper game. It basically sets the price of gold, and the physical price takes that price in London, and China says thank you very much, and they offload the gold. The gold had to come from somewhere. And you got a depository in the Bank of England, you got a depository at the Federal Reserve Bank of New York, you got a little depository on COMEX, and you're certainly seeing gold moving out of COMEX. That's the other thing. Even on the customer side, every day I'm seeing so much, 2,000 or 3,000 ounces every day. We've lost about 95 tons in the last 8 months of gold on the customer side, on the eligible side. So look, people are realizing they're getting kind of scared, and they'll realize I'd rather have the physical. I don't want this paper business. Just like in India, they're going to realize it's nothing but a piece of paper. I want the stuff I can see, I can touch, and I can put away, and I know it's mine. I don't want to worry about a counterparty going bust. Okay, and I think that's what's going to guide this world in the next few months.
Certainly is shaping up to be an interesting end to the fourth quarter of 2015. It really, even just November here in gold and silver, over likely the next week or two, things look like they could get interesting.
That's what I'm watching for. I always watch December with a keen eye. I remember one year, 2 years ago, it was 36 tons stood. That was 2 years ago. Okay. Can you imagine 36 tons of gold standing when you got only 4.7? It's going to be chaos down there.
That's actually a really good point because it describes the system level compared to historical patterns. I mean, that's the missing analysis that a lot of people in our space don't do. I mean, they just say, well, you can flip from registered to eligible back and forth till the cows come home, and therefore there's no issue, no problem. Move along, nothing to see here. And that's not a complete analysis.
No, because there are groups, that, especially December, they take their physical. They want it. Now, there are probably better places to go, and we're certainly seeing it. You're certainly seeing the volumes go down dramatically at the COMEX. Anybody who plays the COMEX is out of their cut and picking lines. If you just want for silver and gold, just go to you guys for silver. Go to gold. Go to your friendly Bank of Nova Scotia or your bullion bank. Pick up your ounces and put it away. Don't buy this on the COMEX so they can go and knock you out. And these guys that try to do leverage, you just can't win with these guys. So don't play with them. And that's why it used to be 400,000 contracts. Now it's 101. A few days. This week was down. One day was 84,000. I mean, this is crazy. Your volumes are because people don't want to play. I don't blame them. Yeah. You're right. There's going to be exciting things coming. Eventually they're going to be knocked out. I mean, this can't keep going on. You can just see it. So whoever, it's when the last ounce is handed in, and they can't supply China anymore. That's the end of the game. The game ends. And then you'll see a revaluation, and you'll probably see gold at probably 20,000, 50, 70,000. Then you'll see silver at 10 to 1. And they'll start all over again. And then you'll probably see silver in coinage, and we'll try to, get this, the economy starting back again. But right now, Main Street is being hurt terribly. The only guys winning in this are the bankers. And Main Street is getting killed. And they're now starting to, to rebel. You're seeing it, By the way, the reason they have to raise the rates is because the economy is so much trouble, but the inflation is driving crazy. The rent, the big rent figure, is driving it so much that probably you got 20 million people that are paying 50% or greater for the rent in the United States. Okay, and that's a figure. So now the Fed has got egg on his face. Well, wait a minute, you got inflation here. They don't like that inflation. They're desperately trying to get wage inflation. That the money goes to the people getting more wages, but it's not happening. So you're probably going to see, and I said never in my lifetime are going to see them raise interest rates, but I think these doorknobs are going to do it in December.
Well, the markets are going to raise interest rates whether the Fed wants them up or not. I mean, that will be the thing that breaks the system, because so far, for better, for worse, and to a greater or lesser extent, we've had people believing that the Federal Reserve and other central bankers have had their backs when they go and expose themselves to bond market sovereign positions that just don't make any economic sense, and the financial system being able to churn higher and higher with easy credit such that the stock markets get goosed, and you have corporations doing record buybacks, and on and on and on. All this stuff that has blown these massive bubbles have resulted in, or have been enabled by, this perception amongst the 95% or so of the managed money assets in the Western world that, okay, maybe some of these folks recognize that there's a game of musical chairs here, and some of them, 20% or what have you, might read Zero Hedge, and smaller percent or even attuned to monetary history, and God forbid, some of them might even be Austrian economists. But they're still playing the game of musical chairs because they think that they still have the opportunity. It's like the former CEO of Citigroup when he was asked about
as long as the music's playing,
crash.
As long as the music's on, I gotta keep playing, right?
That's right. Music's rocking and people are making money, and money is a really powerful aphrodisiac. People don't want to stop with their hands out collecting the dough. So we've had this constant, perpetual motion machine when it comes to the kind of stuff that's going on in our financial markets with the level of interest rates that they are now. I mean, it isn't just the level of derivatives manipulations with interest rate swaps that enable this house of cards to exist in our bond market. And people who follow Rob Kirby's work and so forth know the mouthful that what I just said represents. But it's beyond that even. It is a psychological phenomenon as well. The vast majority of the money managed in the Western financial markets is being managed by people who are either ignorant or they're still dancing because they hear the music and they don't want to stop dancing. And at some point, bond market vigilantes are going to be reborn. And I think that's a 2016 story, and that's the reason why, for a better part of 14 months, my thesis has been that 2016 is when we're going to actually see the big one.
For what I told you guys, in answer to your question, what I watch for is some of the signals to show that. And what we're seeing for the first time, it hasn't happened since 2008, a week before Lehman, we're seeing interest rate swaps turning negative.
Yeah.
Variable from fixed to variable. What it really means, it can mean one of two things. It means that the counterparty is better, that is more stable than the sovereign, which of course that doesn't make sense. The other, of course, is that the amount of collateral is in short supply, and the banks are needs to supply needed collateral desperately. So that's exactly what's going on. Collateral is now in short supply, which is why you're seeing these interest rate negative swaps, which kind of says that the economy really is smoldering. As I told you, this has not happened since 2008. So I'm watching that part too. You never know what these bankers are trying to do, and it's scary times. But that's certainly something we have to watch for, before, because you can just turn one way. Like 1 week, you saw Bear Stearns go under and Lehman. This probably could happen again. Banking profits are coming down. You're seeing Deutsche Bank laying off a lot of people. Standard big bank in England is now in trouble laying off a lot of people. That kind of tells you stuff. These bankers can't make money anymore.
Yeah, and perhaps one of the biggest signals, speaking of looking for signals, was a few weeks back when we saw that massive reverse repo action going on with the Fed. Dave Transler put out some great articles on that and bird-dogged the subject, and I think that it speaks to that lack of Treasury collateral backing up a derivatives market system that is going wild. I mean, all the action in the derivatives market is where the weakest link in the system is, and when a hedge fund or whomever has derivatives and they get a hedge and they get a collateral call for treasuries to back up that position and they're not insufficient, well, the Federal Reserve has to react like there's a 3-alarm fire. And that's what happened a few weeks back. And and the level at which, I mean, we're talking about hundreds of billions of dollars worth of action in reverse repos. It's nothing like that has ever happened before. When you look at it from a perspective of 20 years against charting of reverse repos and repos,
yeah.
The action that happened a few weeks back is an order of magnitude bigger than anything the Fed has ever done. I mean, 2008, 2009 action looks like a blip compared to what they did a few weeks back.
Yeah. By the way, the interest rate swaps is a repo. So that's exactly the same as what we're talking about. So
right.
What Dave Transler saw 3 weeks ago, it started turning negative. It's now really negative. That's what we're all seeing right in the last few days. That's exactly what I'm trying to tell you. So that's where I think it's smoldering. That's why the banks, and because of that, that's why they're trying to hit gold constantly, because they're in such a mess. They got to hit it constantly, because they look at it and say there's no other way we can get out of this mess. The Fed has just got himself totally. They're out of control, and they only know Keynesian, and the Keynesian theories are wrong. One guy, David Stockman, probably says it correct. He says, "What's the proper way?" He says, "Just get rid of the Fed entirely. Let the free market system work. Why do we need the Fed to do the interest rates? The free market can do it by itself." And he's probably right. For sure, he's right. The Fed just made a mess of things. And really what they're doing is feeding the bankers. The bankers are hurting gold because they're shorting and they're stealing and they're doing all these corrupt things, and they keep getting fined. They keep doing and they just don't learn. Okay, and they just keep doing it again and again and again. And no one's there to stop them. And anyway, I just hope that we have freer markets when this ends. And we have regulators who are not put in the pockets of these bankers, and they act what their fiduciary duty is to the public and not to a banker. And that's when I hope everything comes better than what we've been witnessing for the last 4.5, 5 years.
All right. Well, Harvey, we'll take your advice, and we'll keep our eyes on December gold as well as Trading Friday, and when the markets open Sunday night in Asia, things could get interesting. So.
Yeah.
We'll wrap up this week's show there.
We should, before we wrap, we should actually talk a little bit about near term, because typically we do that in the front of the show, but we got so wrapped up with other stuff that we moved right past it. We've gone through 17 days straight, 17 trading days, not calendar days, of gold going either down or basically moving sideways for 2 days. Back on the 20th of October and the 27th, we had basically horizontal style days, small up moves in gold. But for the most part, 17 days of huge downward bias. We've had, starting with today, when we're recording this Thursday after the market close, we've had 8 days of gold going straight down. These kind of periods don't happen that often. You usually see a reversal when this trend gets this bad and the manipulation is this intense. And I think that we're going to see that imminently. It's either going to happen Friday or Monday. So, if we roll back the pages of history 30 days ago and look at what was going on, we saw paper traders coming in, accumulation in GLD, interest amongst Western buyers in North America and to some extent in Europe as well too. The folks that do buy the paper, that do help make the cartel's management efforts a total nightmare, and in fact contribute to periods where we see higher prices. And the best example for current comparison would be back in January. I think it was January 24th where we hit the relative high in precious metals, and that was driven by $500+ million worth of purchases out of GLD. I mean, yeah, GLD is a honeypot that's used to suck metals out for leasing and physical dumping and all that stuff. But I mean, it still is part of a physical demand source when the interest is being, dogpiling in from the Western money managers. So we're at a stage now where the Fed, the central bankers, the cartel have been able to shift sentiment at the heart of the gold period, the strongest seasonal period for gold purchases. It's just amazing to see what they've been able to do. November 9th is the single largest purchasing day in India for gold. Just to put it in perspective, that's how close we are to the heart of gold strong seasonality. But they've been able to keep a lid on things. All things considered, though, we're still unable to see the lows of sub 14 busted, and every time they try to push metals down as aggressively as they have within the last 30 days, they run up against the pressure in the physical market, and I think that that's manifesting now, and we'll see a reversal immediately.
Certainly, like the Indian season, I mean, India has not stopped in its demand. The demand out of India for gold, I mean, you're looking at 1,200 tons a year.
And even with this scheme that they're launching now, I mean, the authorities openly admit that it's going to take years for it to have an impact. So even if it's successful, it's not going to be something that's going to change the overall trajectory of the rebirthing of the bull market.
It won't have any effect on us at all. It might even be probably helpful because certainly India will keep its gold sovereign. So if you have another country, so in other words, the gold official reserves will be flooding into India sovereign, just like gold going into sovereign China or gold into sovereign Russia. You look at that country. Wait a minute, this would be good, okay? So you're probably seeing the sovereign get stronger. And so I really don't think that would really affect us one iota. I wouldn't worry about it too much. It just doesn't make sense to me that, first of all, I don't think of citizens. They love wearing their gold. I mean, that's their culture, and I just can't see that them changing it for an interest rate. Just not their culture. Anyway.
All right. Well, hopefully Eric's right, and we'll see a turnaround in the next trading tour day, both in gold and silver. So we'll wrap this week's show there. Thanks for tuning in to the Doc, Eric Dubin, and Harvey Oregon for this week's SD Weekly Metals and Markets.